Welcome back to the channel, everyone. If you're a trader who prefers scalping and intraday trading compared to swing trading, then you're definitely going to find this video useful because I'm going to be sharing with you one of my strategies that is meant for the 5-minute chart. As you can see here, I'm on EURUSD in the 5-minute chart, and it's a very simple strategy that you can implement straight into your trading just using two concepts, which are these two concepts here: Asian session liquidity and change of character. So rather than going straight into the charts, I'm going to talk a bit about the theory behind this and the setups that we're going to be looking for, because once you've got that and a greater understanding of the strategy, you'll be able to spot it more and take better trades that follow the rules. So I'll just get rid of this and we'll go back a bit. So you're going to be wanting to come into your trading day after the Asian session. You can add this indicator here, just this one, Asian range, Nico 948. Just go into indicator tab, type in Asian range, and it's this one here. And this will highlight the Asian session for you, and you want to come in, take a look at the charts when it ends. If you're able to, this is the ideal time to come in. You can come in like an hour after, and it probably won't have made the setup yet, but it all depends. You want to be at the charts ideally when the Asian session finishes and we start to move into London Open, because as you know, that's when the volume starts to kick in. But from this situation here, we're going to be looking for two setups. First is going to be bullish, and the second we look at is bearish. So what you want the price to do is either take out the lows, go down maybe, and then cause a change of character. Then you want to pull back to your 5-minute zone, and then you want to target either the Asian highs up here or this recent high there, because sometimes this high won't be this low down. So if I get rid of that, sometimes you'll see something like this. Price comes down, take out liquidity, causes a change of character. It might continue up, uploads, and then come down, create some liquidity here, tap into your demand zone, and then you can target this up here as your profit. So this is the bearish setup. You're looking for price to take out the Asian lows as there's liquidity resting below there, and then cause a change of character here. Price is going bullish, and you want to pull back to your 5-minute demand zone. Over there, you just enter, sell limit, take profit at these highs, and then rinse and repeat. So for a bearish setup, you're looking for similar, just the opposite way around. You want price to take out Asian highs. It can either drop down straight away or it can continue up. Doesn't matter. Break the low that caused a new high, pull back to your zone, and then take price down. So you've got your 5-minute zone up here that you're getting in on, and you've got your change of character there. So this is the textbook bearish setup you're going to be looking for. There is one more that's a bit more complicated that we'll look at in the real chart example, but it's basically just when it goes one way, then goes the other, takes you out on your first trade, and you can look to get in on the second trade, which can be nice. You lose one trade, and then your next trade wins, makes up for your 1% lost, and then gives you a few more percent more in one day. So if you want to put this strategy into rules, this is what I do. First of all, you're waiting for the Asian high or low to be broken. Secondly, you're waiting for a change of character. And then third, entering on the 5-minute order block. Does work on the 50-minute time frame as well, but you get more sniper entries on the 5-minute, obviously at the expense of missing a few trades, but that's just the way it works. Okay, so we're going to get into the first chart example, EURUSD 5-minute, 22nd of December, and this will hopefully give you an idea of what the setups look in real time. Obviously they're not going to be perfect like I showed, but let's go. Okay, so price is taken out Asian highs. Now we're waiting for it to change character, wait for these lows to be broken. Okay, lows get broken, and you can see a nice 5-minute supply zone that caused the break. So as you can see, step 1, Asian highs are taken. Step 2, change character. Step 3, entering on this 5-minute order block. And then you can target the Asian low for 15%. Obviously, there's going to be a low win rate on that. Or if we wait for price to tap into our zone, we can target the low that was formed there for a 3.69%, which is still very nice. And we'll see what happens. So it does hit that, and then we get taken out. But that's all right, because even if you went for this down here, you can just look for the next setup. And obviously with 15% profit for 1% risk, these trades aren't going to happen as often, but when they do, all the losses that you have will be made up for in one trade. That's just something to look out for. But again, 3.5% trade was very nice. You could have easily got in on that just following these 3 rules. So if we just continue what happens, see if there's any more setups. So the first rule is still met. You know, the Asian highs have still been taken, and these highs have been taken as well. so we can let it play on. Okay, we get a change character here. We got a change character here going bullish, although it seems like a change character, but it's more just a liquidity sweep. As you can see, price pushes up and then shoots down. But this still here. Call it a breaker structure, call it a change character, whatever you want. It fills our rule 2. So rule 1, Asian high, low broken. Yep. Rule 2, wait for change of character, done. And then step 3, enter on the 5-minute order block. So one thing to note about the strategy is if you know the concept of imbalance, and you know I like trading off order blocks to have imbalance. I mean, is there any imbalance here? No, there's no imbalance there. If you went to a different time frame, like the 15-minute, you can see there's imbalance between these two candles, so the price is still probably going to pull up. And this makes this zone very nice. This is your 15-minute order block, and we've refined it to a 5-minute. That's all it is. So we stay on there, put our sell limit on this order block somewhere, stop loss above it, and target either the Asian lows or the low that's formed once we get tagged into the trade. So I'll leave it here for now, but then we can adjust it when we get tagged in if we do. So okay, we've been tagged in. And we can adjust our take profit to here for 2.44%, or the Asian lows, depending on what you want. And then let's see how this plays out. So if you were targeting this low, you would hit 2.44%. Very nice. Even if you lost the trade earlier, that's still up 1.44%. But if you were targeting the low both times, you'd be up 6%. So that's very nice. 2 trades in one day. But we'll see how it played on after that. Okay, so as you can see, Asian lows were just taken. And so if you had been targeting that, if you targeted the Asian lows both times, the first trade would have lost 1%, this trade would have won, so you'd be up 3.5% for the trade for the day. So as you can see, it's really simple strategy, really easy to follow, and very nice for intraday trading. Okay, so the next example is still going to be EURUSD on the 5-minute chart. This is the 21st of December, so we'll see what happens. Price is just in the range at the moment, and the highs have been taken, so that's step 1. So we're going to be looking to short once we get a bearish change of character. Okay, so just something to note here. You might call this a change of character. I wouldn't, and you shouldn't. Price is going up. This isn't some major structure, and just because it's broken, that's more of a liquidity grab. And even if you did class as a change of character, there's no 5-minute order block for you to get in on. You know, if you're looking at this one here, you don't want to get in on something like that. That's huge, and it's not an order block because this bullish candle is huge, and there's not much selling pressure. As opposed to here, on this candle, you could have get in on this candle had it caused the change of character, which it didn't. So obviously, it doesn't follow the rules. But it did get tagged into, and so what we say is that this order block has been mitigated, and so you're not looking to enter from that again, but we'll be waiting for a change of character now of here. So if this low gets broken, we can look to go short from this new 5-minute supply zone. Okay, so this low's been broken, and this is now change of character. Rule 1 is met, Asian high, low broken, high's been broken, so we're looking to short, wait for a change of character, we've got a bullish structure here. This is the low that we're waiting for change of character on, and it gets broken, so now you can see we're going short. See here we made a higher low, and then a lower high, and now a lower low. So now we're looking to get a lower high to go short. So your entry, stop loss and take profit. Wait for you to get tagged in if it wants to come back. And it does. So now you can set your take profit at this low here for a nice 1 to 4. And it gets hit there. Does it take out the Asian lows? Yes, it does. As you can see, a lot of the time it will. So if that's something you'd rather target, obviously if you see my Asian manipulation video, I'll be making an updated video on that. But for now, just the Asian highs and the lows like to get taken. There's a lot of liquidity resting below it. As you can see here, there's some equal lows. Price is going to target here for the sell side liquidity, take it out if it wants to go back up. And so it's always a nice place to target for a 5.5%. But something to note from this setup is the fact that if your highest, your most premium supply zone or most discounted demand zone has already been mitigated, then you want to go from the next one on. So that's going to be this one here. As you can see, sniper entry. And you don't get sniper entries with strategies that don't work and just made up on false concepts. So obviously you can see the theory behind it is obviously right. Okay, so in this last chart example, I just wanted to show you this because it's going to explain the more complicated setup that you could see, where you get both directions for you to trade in and how you can manage it. So let's just play and see what happens. Again, just in the trading range at the moment, and price breaks the highs. So now we're going to be looking for a change of character, waiting for one of these key lows to be broken. Obviously, when this low got taken out by this candle, there's no order block for you to trade on that's above here. So we're just going to let it play out, see what happens, and now we're going to be waiting for this low here to be broken. So the Asian high has been taken out, and now we're waiting for a change of character. Okay, and we get that here. Mark up our 5-minute supply zone. It's quite a big one, but up to you whether you'd get on it. Follows the rules, so no reason why you wouldn't. Targeting the lows, you're going to get 2%, so maybe you want to avoid it, but anyway, we'll just leave it. Price hasn't taken out the Asian lows yet. Okay, now it has. And then we get tapped in, and then the trade ends up losing. So maybe something to backtest. I'll backtest it as well. If both the Asian high and the Asian low get triggered, maybe you shouldn't enter. You should leave that day. But if you do enter on one direction, then you should enter on the other. So for example here, on this trade, all the rules were met, Asian high was taken, got to change character here. And then we entered from our 5-minute supply zone, and we lost 1%. Obviously you're going to have losing trades, so you don't need to look into it too much. But if there is something that you can see that you did wrong, then obviously improve your trading based on your mistakes. Over here, the bearish setup didn't work, so now we can look for the bullish setup, because obviously high got taken first, and then the low got taken, so now we can be looking to get in from this low. So then for the bullish setup, as you can see, Asian low is broken, so now we're looking to go along. We get a major change character up on here on the large structure, showing me going bullish. Mark up your demand zone, and then let price play out with your entry from here. Stop loss below. Because the Asian high has been taken, we're just going to be targeting the high when we get triggered. So we'll see what happens. Okay, price has gone quite far away from us, but that's fine. You can see a lot of bullish market structure, nice pullback. And possibly some inducement here. Some liquidity being created above our zone, that's very nice. And you can see if we're targeting this high now, we'd be getting a good risk reward, even on the large stop loss. Okay, so we've now been tapped in, and we'll be targeting this high instead now. Over there, the most recent high, that's a 5.7% if it plays out. And it does, takes out these highs. A nice manipulation by the big institutions. This was the FOMC event on the Wednesday at 7 o'clock. Price pushed down into our zone and then took off back up here. So very nice trade that we caught. A lot of liquidity inducement here. Just above our zone, which is always good confirmation, but played out nicely. So if you lost the first trade, got in on this trade, that's 4.7%. But if you just ignore this trading day as a whole, because it's quite messy, taking out both, then that would have been fine as well. But these are rules. You can backtest it on different pairs if you want, and check the 15-minute if you'd rather trade that. But these are the rules, and as you can see, they do work. Obviously not all the time. I've just shown 3 winning days, but there are days that lose, and there are multiple trades in a row that will lose. But over time, if you've backtested it and you know that it has a positive expectancy, then you can definitely make money with this strategy. And it's good if you prefer intraday trading or scalping on the lower time frames, such as 5-minute. So hopefully you've learned something from this video, and if you want to keep learning more, then subscribe to the channel, and I'll be posting more videos more consistently now, try and help you become profitable traders. So thanks for watching, and I'll see you next time.